The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Well, folks, from the offices of Duke & Duke 100 North Broad Street, the Newton office, Massachusetts, you have Love Me Tender, Love Me True. Nope, it's not Larry Pesavento. It's Basil Chapman sitting in for the one and only Larry Pesavento. Vocal problem today. He'd love to be here, but his voice is not up to it. So I said at the last minute that I'll take the time. I'll sit in for Larry. That's tough to do. The stories that Larry has, I mean, the technical trading, the education, what can I do? I'll do the best I can. And I'm not going to be able to say at 1977, no, I think it was 1976. It was a Tuesday at 4 o'clock, and the market had just closed. Yeah, I remember I was with Billy Ray. Anyway, so here we go. The Dow is down 229. It's come back off the low of the day. It's holding a little bit better, and that's going to be very important. We want to see where it closes today. This is a leg B up in the Chapman Wave methodology. Let me just do this really quickly. We'll get rid of the Elvis song out. There you go. And we'll go straight to some of the Chapman Wave techniques. Let's do this really quickly. Just a brief overview. I know that you'll be waiting to hear what Larry says, and Larry's not going to be able to say anything. His voice is out, so I'll do the best. I try to identify the lowest low, and then I count each successively higher peak alphabet. As long as you don't break that starting point, each peak gets alphabetized, A through G, 7 higher peaks. It's at peak D, the fourth highest peak, that other things can happen. Simple technique. That's all there is to it. Once you get to D, then there are other things that you need to take into consideration. A buy signal gets upgraded to a buy mode. The implication says if once you say buy mode, it implies that you should go to at least 4 higher peaks in whatever you're trading. We just did this in the 1-minute chart earlier on. And one of the reasons why I decided that would be a good hour to do Larry's show is that because this 200-period moving average is so important, I thought I'd avoid making a couple of mistakes in my own trading. Just better just be on the side of caution right now. It's held it many times. This is the 200-period. Of course, I'm talking 200-period moving average. This is not in Larry's lexicon whatsoever. Yeah, he always tells stories. I'll tell the story. Way back, we were having one of the Tiger TFNN, one of our big meetings, our little convention, let's put it down in Florida, down, I think it was at Clearwater. And so I don't think I'd met Larry at that point. So there were presentations made, and there's this huge audience, and Larry made his presentation. And as he's about to finish his presentation, and I was next, he said, and believe me, if you don't use and he said something like a 200 moving average, and he derided those moving averages and rolled his eyes, and you could hear the audience, the people that knew my work, you could hear the silence. You could hear the silence. It just like, whoops. No problem. I came on, and then I started showing how these things work. That's at Sand Key, Sheraton, Clearwater. And I discussed moving averages. And I said, you can use any technique you want. Just be consistent and use it judiciously. And if it works, repeat it over and over and over. That's the best way to use any technique. And so I always chuckled. And so now I think Larry's gotten over the years, gotten used to the fact that moving averages are just as viable as Fibonacci numbers, whatever. Look at this. Here's the 200-period moving average in the daily chart of the Dow, down 206, coming back nicely. And it went under it and over it and under it and over it, but mostly under it. And now what it's done is it's treated the 34,584 200-period exponential. I use exponential moving averages as support, and we've got this huge move to the upside. And where did it stop? You see this pattern with the lower highs, trend line, and much lower lows. I call that the falling axe formation. Just I like to nickname these things probably if I had never nicknamed them, but I gave them really sophisticated terms. They'd be used in the lexicon right now. They won't be used in the lexicon because nobody says falling axe. It's a declining, expanding cone. Too many words. You got your move to the upside, then you make lower highs and much lower lows. Then all of a sudden you find support. You make either a cup or a V-shaped formation. So far it's a V-shaped formation, and you start to move higher. If you take out that trend line, this is also where I put a Chapman wave inside track repellent zone. Usually I have two lines. I just didn't want to make it look too messy. So what I'll do is right now, we'll do that right at this moment right there, red. That's not red. This color right here, make it pink. Put it over there, and the outside one will be green. And you want to see this repellent zone become a propellant zone by moving above it. And that means that this is the tremendous support level, which we've seen today in the Dow. And then you break up, and you can go one-to-one to the upside in like a propeller shaft move under certain conditions. All right, we don't have to talk about that. We just want to say the Dow's down 212. The daily chart has been in the sell mode. It's now turned into a buy signal. That's all, buy signal. But the buy mode says it should go to at least 4 higher peaks. We haven't got there yet. So let me talk about the S&P because this is part of my technique. The S&P, I always said at least 4 higher peaks. It can go higher. You can even go to that 7th highest peak, peak G. That's what we've got. We're in a sell mode in the weekly chart, the daily and weekly chart of the S&P. On the short term, there's a chance that if we have a successful close near the high of the day today, I might call this a buy signal. Then we have to wait for a buy mode above that trend line resistance. And now look what's happening. That 200-period moving average is becoming a propellant, and that's really important. So what's important also is that we've only made leg B in the monthly chart of the S&P. Chapman wave methodology says over all the, I wouldn't say hundreds of thousands of charts. I'd have to say 500,000 to I don't know how many charts I've done over the years, decades that I've been doing this. Even intraday I do all the charts. Look at this. Intraday, we're starting to break out of the rectangle formation. Nope, that rectangle formation can last a lot longer than your patience. I'm going to show you the dollar in a moment. Look at this. This is the E-mini trying to get to the upper part. This is peak A, peak B, leg C, but it'll be confirmed if we can go above 43.45. Boom, 43.45. Have we hit it? Have we hit it? Oh, we've gone to 43. What was that? 43.34. So this is going to be very important because this now looks, with a MACD good and the stochastic at 87%, that it should go a little higher to the 43, 45, 37s. We'll be back in a moment. Wow, time flies when you're having fun. Let me get back to this. So the monthly chart says that in 2022, there should be higher peaks to come. In other words, a bull phase, regardless of how much we pull back, there should be higher highs in 2022 in the S&P, higher than 4818.62, the high of the 4th of January. I'll be back in a moment. Basil Chapman sitting in for the one and only Larry Pesavento for Trade What You See.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman sitting in for Larry Pesavento. Tough to do, but this is what I want you to show you. This is Trade What You See. And what do you see? Remember, I was just discussing in the Chapman methodology how the fourth highest peak is where other things can happen. That's where you got to get cautious. The objective is to get to the fourth highest peak, and then you got to say, okay, reassess what's going on. If within 3 bars it makes a new recovery high, you can have an alternate count and have a brand new move all the way to a peak D, or it just can continue higher. You can see I circled it right here. The natural gas continuous contract had right there back in July, August of last year. It had just 1 week where it had a little bit of a tiny doji candle pullback, and then it broke out. So I had said, let's treat that as an alternate count, E/A, F/B. When it gets to G, that's where you got to be careful. Is it a G/C? But you got to look at your technicals. Look at the way the on-balance volume reversed. Look at that plunge from the 6.50 area down to the 3.50s. And now we've had a big rally. And what did it do? I didn't know. I just picked this up. I said, let's just move on to the commodities. That's what Larry would do. Well, peak D today, if there is no new recovery high, down at 4.85, down 0.64, down 11% after a huge green candle right there. But the stochastic is still at 83%. So far, that's showing strength. The MACD is good, and the 9 is still way above the 14. Look what happened when the 9 crossed over the 14th right there, over the 14-period moving averages. I know this is Larry's show. Talking about moving averages is sacrilegious. That's okay. You know that Larry loves sacrilegious. So we're looking at on the 11th of January of 2022. It was the 10th of January. The 9 period crossed over the 14 period and has not crossed negative since then. And look where you've gone. You've gone all the way from the 3s into the 5s. And now you're at 4.845. That's where we start to look at the 120-minute chart and all that. I don't have to do that now. I do want to, let's just do the other commodities. So for my subscribers to my opening call, we've been long the DBA, which is the DB Agricultural Fund, for a long time. We're long from 13.77. I always have to go back to see exactly when. It was the 23rd of July of 2020. We've taken a couple of little bits off but mostly we want to keep this because I think the whole inflationary aspect is saying, be careful out there. These commodities, one by one, are starting to move into areas that says to you that there will be a transmission of higher commodity prices into the products and then into the supermarkets at some point. And I must admit, I was at Trader Joe yesterday just briefly. There are a lot of things that aren't there. They don't have things on the shelf. This is something we haven't seen for a long time. All right, so DBA is trading at 20.53. It has corn, so it's breaking out to new recovery high, leg E/B. I have an alternate count right here, but at the moment I'm just treating it as just a continuation of the buy mode. The weekly chart is in leg D, so it's got to start being a little careful. And look at this. Thank you, G7. Did you see what UK did? Approved a 50% increase in electricity. Did you say 50%? That's not 5%, that's 50%. I mean, how do people do that? 50% on a budget, that is really difficult. Leg E in the monthly chart. Most importantly, let's go through the order that I have. Soybeans, new recovery high. Will it break above the high that was made in, what was that month? That was July of 2021. Well, the pattern that we're looking at here with the MACD forming the first left side arch and now going above to the second M-shaped right side arch says there's a chance because the price is leading, but the stochastic in the monthly chart is lousy. It's at 58%. So what I do, I look at patterns, and what I do immediately is I just draw in a cup formation like that. And I say, good, cup formation is still intact. The left side high of, this is a continuous contract, so this is not the price that you would find. It changes every month, it gets smoothed out, but I'm calling it 1625.5, way back in May of 2021, and we're at 1550. I think that we're going to get close. We're in look at this leg B in the right there. This is leg C in the weekly chart. We're already about to test the first left side high of the 11th week of the 11th of June at 1581 3/4. We're at 1551 right now and 3/4. I'm going to draw in the cup formation, and I'll show you what I normally would do for subscribers when I'm showing the charts that I show when we're buying something new or even when we're just studying them. I draw this in. I draw the cup formation. Then if I look in the cup formation, I love to see if there's going to be just a beautiful low that is proportionate to the move on the upside. This looks lopsided, what I call a lopsided gravy cup formation. So I can't use that. And not only that, if I went from the high to the low right there, it would just take too long. I don't want to go into March or April. I want to be closer. So then what I do is I choose a particular candle, and I say, okay, that candle, the doji candle, I usually like doji candles. That's where I'll go to the first one, and that says that's where the market was so uncertain right there that I'd like to use it. But I say, no, wait a minute. So there is a science. The science is go to the high and then go to the obvious low that looks like you turned around significantly and see if there's a proportion. Well, the number of bars on the left is we're already close to the high, so it would be lopsided. So I can't use that low there. That would be perfect. Now it becomes art. And the art that I have is I go to a particular level on the left side, and I try to be as conservative as possible. This would be aggressive right here, but it could work. So I'm going to use it right now and say, this is the line that I'm going to use. And now what do I do as a measurement from the left side to the right side? I go like this, I click on it, I go parallel, now I repeat it right there, I go green, and I see, does it take me to that line? Well, it doesn't take me to the line. It takes me, the line is this week. Well, it's a weekly chart. I don't know if we can do it by tomorrow. So I extend it out to this particular dashed line. So now the art becomes more of an art because I'm now going to use a left side, right side proportionate move. And what does it say? It says, good. And it says, by the week of the 4th of March, and we're in April. That's already way too long. I don't like that. I think it'll be much sooner. There's a chance that we could, within the next week and a half to 2 weeks, we should test the high that was made on the 14th of May, 2021 of 1625. All right? And this is a leg E. It says be careful, but at the same time, it could be a leg E/B. I don't have to change the notation. I'm just being kind of just following the alphabet here. But the MACD is strong, stochastic is fantastic and flat at 93%. On balance volume says, be careful, you could have a little bit of a pullback, but it's still very positive. So I'm positive on soybean. Let's go to the next thing. Oh, wheat. I usually start off with wheat. Wheat is the exact opposite. This is Chapman wave Eiffel Tower. Falling axe from this is the alphabet A, uppercase A. Straight up, straight down. So this is the one that's lagging. Let's go to corn as we go to the break. Corn made a peak D. Look at that pullback from peak D. I'll be back in a moment to talk about the rectangle formation. Basil Chapman sitting in for the one and only Larry Pesavento.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, folks, we're back. Basil Chapman sitting in for Larry Pesavento. So we made a peak D in the corn, but look at the rectangle formation. Look how long you can stay in a rectangle formation. Yes, you can go above, but the chances are you're going to come back right into the middle. It's trading at, after that peak D at 642 and a half-ish. It's pulled back. Today's low is 610. 2.25. It's trading at 617. Digestive phase was still in an up move in the weekly chart. But look at that rectangle. What do I mean by rectangle formation? That it can last a lot longer than your patience. Why do I say that? That's the reason why I want you to. I said, I'm going to take the opportunity. I'll do Larry's show because I knew otherwise I'd be trading, and I'll be trading a rectangle formation, and that can cost you a fortune because every time it gets to the top, you think it's going to break out, and you try to put the position on, and whoops, comes right back in. Every time you think it's going to break down, it comes back down, and what happens? It goes back in again, and that's exactly what we've seen. Look, here's the 1 minute chart of the E-mini. It went to a peak C, and then it failed in the rectangle formation right there. Look at this. Since about 10:20, we've been between 45.34 and essentially 45.18. Look how long we've been in the rectangle. Haven't broken out. With a market like this, with Facebook collapsing and dragging a whole bunch in the sector down, that's one of the reasons why for subscribers to my opening call, I've been deciding that we want to go into areas that are not necessarily related at all to the general stock market, into commodities, into areas of commodities, into the commercial products of in the agricultural sector area, maybe the coming back of the economy and the general population getting outside entertainment and outdoor entertainment, that type of thing. So that's I think it's really important right now to think out of the rectangle box. In fact, look at this. It's the first time we're about to test the support, 45.16. If we break that, now you've got 45.25. Excuse me. Talk about Larry's throat. I don't know what's going on here. It must be the hour. This particular hour gives you scratchy throat. All right, so we're still stuck in the range. Remember, this is where you think it's going to break down. We'll see if it breaks up or down. Let's get back to our story. So we're looking at the commodities. We're looking at corn in a buy mode, just on a very short term. And the daily chart has pulled back. I'm still calling not yet a sell signal, but it's pulled back some. You've got your leg F in the. Look at this long rectangle formation. Was the alternate count here? Well, within that you had your count. Doesn't matter. You don't have to look at counts. Look, the MACD's flat. It means you're running out of momentum. Torque is the stochastic gives you torque, the actual thrust. And then you have to have the MACD continue it. Well, the MACD is good, but it's flat. Stochastic's fabulous at 89%. I love a flat stochastic. It means that there is still support at this particular time at about 597, the 590s in corn, and we'll be watching it. But it's leg C in the monthly chart, and it should either extend leg C or go to a higher high at some point. So that's it. Let's just look at wood, which is the iShares Global Timber and Forestry ETF. If globally we're starting to see a nice comeback from the 200 period, how important is the 200 period moving average? Let me tell you how important it is. You can use any tools you want. I have my Sears and Roebuck huge toolbox, and I use whatever is. Did I know this? No, I just dragged this out right now. Look at that 200 period moving average. Was that a springboard ever since the low of September? Around about the 20th of September, every time it went one bar below, it popped up. One bar below, popped up. One bar below, popped up. Then it went one bar, pop, one bar, another bar, pop, 3 in a row. And then it said, oh, I'm done. And it goes all the way up to the 88s, pulls back one time, December. I think that was December 31st. November the 11th. Yeah, November the 11th. And then it starts to treat it not as a breakdown, but a support level. Kapoo! We go all the way to a peak E, doji candle, island reversal top at 95.27. This is globally. And it's saying that globally there has been some comeback in the timber and forestry ETF. And now look what's happened. It's still in a leg B. I have to call this a gray leg B, although it's blue because I haven't had a chance to change it. A gray leg B, because I haven't got a buy. I'm close to getting a buy signal on this. I haven't got it yet. MACD did cross positive. Today, we have to wait for the close. The 9 has just gone above the 14. That's a good sign for at least a little bit of a follow-through. Stochastic's still very weak. So that's not lumber prices or anything like that. That's the timber and forestry ETF. We did make a peak D at 98.98 on the 15th, the week of the 15th of May, 2021, slumped from the 98s or 98, 98 level down to the 83s. Then we ran up to a peak C minus because it pulled back, but it didn't take out the left side low. So each peak gets counted. And where to go? Peak D. So we're pulling back. The monthly chart is only in a B. There should still be at some point C's and D's. So isn't that interesting? I thought it would be take a moment to do this. Why? Because it's just another series of techniques, and it's just worth showing. All right. Sugar, SB, makes a peak F in the weekly chart way back at 21, and then it pulls back, but it's just coming down very gently, low highs, low lows, low highs, low. It's like it's in a sell mode in the weekly chart. The peak E in the monthly chart, I should put a down arrow, but I have to wait for the MACD to cross negative. Hasn't yet, and here we are. That peak E in the sugar in the 20.60-ish area back in November has seen the 200-period moving average act as support. You've got your dreaded H pattern. Oh, what is the dreaded H pattern? Now, what's funny, I can do this visually. This looks very much like a Larry Pesavento Gartley pattern right here. And then it comes back down. So the pattern that I also look for here is, this is the dreaded H. In other words, I look at three different patterns in the market: straight line up, straight line down, cup formation, or an arch formation. You can get a combination of 1 and 2 or 1 and 3. In this case, 1 and 3 because it's the H pattern, dreaded H, because if it takes out that left side low, it can go a lot lower. It can go from the arch high to the base. It could go 1 to 1 to the downside. Well, it did that. And then it started to rally, and it went to a peak B, and now it's slumping. What's the importance of the 200-period moving average? It's like a fulcrum. You're over it, you're under it, you're over it, under it. There should be an attempt to get to the 1853 level sometime soon, but it won't happen if at 1777, the low today, if it closes under 1750, chances are you're going to test the dreaded H pattern to go to that left side low of the 10th. Okay, so there's the patterns. I just thought it would be worthwhile we do some of that, keep me out of trouble here. I think there's a chance that rectangle, the rule of the rectangle formation, look at the IWM. Actually, no, let's do the dollar. Larry's always looking at the currencies. The dollar is plunged from the 97. And what I've been saying for a little while, well, first of all, we are long from 90.07 via the UUP, that's the power bull or something, dollar. Look at that rectangle. From 24th of November at 96.94 to the low of 95.52, it stayed within that rectangle. It popped up a couple of times, but it's basically been in the rectangle. Then there was this big slide back in January to the 94s, and then what does it do? It goes all the way above. And what I'd said, everything about this is suggesting that little doji candle there could be a turnaround. It looks like a D. It's not acting like a D, but it looks like a D. I'll be back in a moment. Basil Chapman sitting for Larry. Minus 257 in the Dow, minus 62 in the S&P.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So looking at the euro-dollar currency pair, this is Basil Chapman sitting in for Larry Pesavento, if you didn't recognize the voice. What we've got here is a move up at 1.143, up 0.012. Look at this move, counterpoint to what the dollar is doing. There's the rectangle formation, lost a lot longer than your patience. Very often you go above, then you get below, and then you go and you test the middle. When you go straight through from the outside edge with a doji candle, look at this tiny little doji indecision. I love that when you get a turnaround. That's why I was watching, one of the reasons why I said, I really think that this dollar doji candle, look at that tiny little, everything about this looks, with even the reversal of the stochastic, the unbalanced volume you can't see because it doesn't have volume in the dollar index. But everything there said that looks like a D. So I said, let's watch this closely, and look what we've done. We've pulled back from the 96s right down to 95.40 at this particular point, and look at the inversion. It's like a mirror image. There it is on the downside. And now you're breaking out to the upside. If the euro closes at any point in February, I would say within the next week, but in February, above, see, there was that doji candle there. That's not good. Into this candle right here, the candle of the 10th of November, 2021. 1.1595 was the high, 1.1476 was the low. Anytime it gets into this candle, the low is right there. The 10th low was 1.147, and we're at 1.1430 now with a high today of 1.145. The moment we could tag that, that's this one all the way back, it means that the high that was made at peak E at 1.148 on the 14th of January, we've got to be looking at that very closely, because if there's a pop in the single leg A to the upside and failure without closing above 1.148 in the next 2 days, it says, okay, little stalling pattern. If the euro at any point, but what's today, Thursday, if by next Wednesday, Tuesday afternoon to Wednesday morning, the euro has not broken below 1.134, but instead has moved a little higher, that's going to be really good action. If it closes above 1.148, then that low starts something completely different. The low of 1.147 in the euro from the 10th of November. It means this candle is going to be the big challenge, because once it gets to test inside a half of that candle, it means it can go to the 200-period moving average of 1.157. It hasn't been to the 200-period moving average. You don't even have to care about the 200-period moving average. But once you start getting close, look what happens. I didn't even know this. I just pulled this up now because I thought, hey, let's have a little education session. Look at this. You've been under it, and then you tested all these times the 200-period moving average, exponential moving average, and got repelled. So the moment you get close, it says that becomes an attractor, a magnet of 1.157. Let's go to our caller. We've got Mike in Ormond Beach. Mike, how are you?
Hey, Basil. Hey, I just wanted to comment. I heard the first part of your show when you were talking about moving averages, and you're one of the first technicians that I learned the importance of moving averages from. And there's a couple other technicians outside of TFNN that are very good that I follow sometimes, and they show us how important they are also, because they say that most every major money manager in the world has the 50 SMA and the 200 SMA on their charts. And, you know, he tells us to keep those on our charts so we can see what they're doing at those levels. And another thing I've found also is a lot of times Fibonacci, retracements or expansions will either support or resist at certain moving averages. They correspond with some Fibonacci numbers. So I think they're very important to have on your chart.
So thank you. Yeah. So now, one thing I want to make clear. Larry was always joking when he said he just for him, he could not use those. So he didn't put down the moving averages per se. It's just that he didn't use it, and that's why I kind of got the roll the eyes aspect to it, because it can be very cumbersome if you have all the stuff on the chart. I agree 100%. But look how important. Look at the euro. Maybe you can't see it because you're not looking live. But look at the euro when it broke down with a 9-period moving average, went under the 14-period moving average of the 25th of June, the week of the 25th of June, 2021. To this day, it has not gone above. And look at that beautiful trend to say you're in a downtrend, you're in a sell mode, you're going to stay there until you get a confirmation that you turned up with the 9 over the 14. Now today, we're looking at the 9-period really close to moving above the 14 in the daily chart, but it hasn't taken out the 1.148 level. So that's important. So that's number one. I want to say my biggest point is, whatever technique you use, let's just say you get outside, you wake up in the morning and you always get out on the left side. And every time you get out on the left side, the market's up. And then one day you get out on the right side and the market's down. If you want to use that as an indicator, good. I got into technical analysis way back when I was a professional musician. I was in the market. I'd always been in the market ever since I was a teenager. My father and I used to have fun together. I used to hear a report by John Slack, I think it was, in the Boston area. He gave a 12 o'clock and 4 o'clock update on one of the programs. And I would tune in, and I suddenly noticed that whenever he said prime computer was up and the market was down, by the end of the day, the market would be up. And I developed this prime computer indicator, and I said, you better be careful. What if it gets taken over, which eventually it was? Well, what do you do? So I developed all these other indicators. But that prime computer was just unbelievable. Every time the market was up and prime was down at noon or at 12:20 when he get the market. So whatever you use, just be consistent, understand it, and use it judiciously and use it appropriately. That's all I'm saying. Look at this trend line that I drew ages ago in the euro right here. Look at this weekly chart. Let me see if I can open it up. Yeah, look at this. Beautiful. From the underside to the upside, there's this trend line. It became the support, broke it a couple of times, went back in, and now it's support. So the MACD's turned up in the weekly chart for the euro. The week's young. We still got tomorrow at 4 o'clock. We're going to wait until then. But things are improving. And if you do the exact same thing with the dollar, you'll see that this beautiful bull formation is saying at some point the dollar is going to break up into the 100 area. But right now it deserves, at peak D, in the weekly chart, it deserves a bit of a break. So thank you very much. So once again, I'm going to
just give us a brief intermediate view of where you think the S&P is going to go, and if we continue lower, where important support would be?
Okay, so right now in the shorter term, my pattern that I'm looking at, let me open this up and I'll talk about this pattern. All right. Oh, there's we've still got time. I forgot. So can you hold on a moment? I'm going to draw this, and then I'll give you the exact what I'm looking at, and I'll even expand it so we can talk about it. Folks, I'll be back. This is Basil Chapman. My show is the Tiger Technicians Hour, just before Larry's show. Larry's voice is a little raspy, can't speak today, so I'm doing the show, doing the best I can. I'll be back in a moment, and we'll be back with Mike in Ormond Beach. We talk about the S&P.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hi, folks, we're back, and we are on, on with Mike in Ormond Beach. But just real quickly, and this is appropriate to what we're talking about, DAL, which is Delta Airlines. Question is, does today's price look like a closed start position for DAL? And what I would say at 40.23, just down 29 cents, I would say just give it a little room. If you look at the 39.80, and then if it goes under that, I'd get out. It's hugging the 200-period moving average. And it takes me to the next thing, which is the S&P. This is the chart pattern that I've drawn. I suspect that what we're looking at is that extremely oversold condition as dictated by the VIX index. So there's enough upside action to try to test the 4,600 to 4,628, maybe 4,632 level. There should be maybe an arch formation, then a second arch formation, and that's the one that I'm looking at and saying maybe in March we get a tradable low we'll see what happens. So that's kind of what I'm looking at. The most important thing is the 4420 to 4400 level at any point in February. If we take that out, that's a big deal.
All right. Well, thank you very much, Basil.
Hope that helped you. Thank you very much for calling. So, folks, let me just do this because I think the reopening of the country, that is the getting back, is you look at JETS, which is the U.S. JETS index. This is the United States, all the airlines, holding quite well when you think about what's going on. So we're watching that real closely because if it starts to move, let's include, say, a Disney. If you start to get the outdoor activity, almost the same pattern. If Disney starts to trade at 141 right now, if it starts to trade any time in February above 150, filling in that gap, that'll be the sign you're looking for to say, hey, economy, in terms of the public's outdoor activity, is really making a difference. Then we've got to start looking at the restaurants, etc. So I hope that helps, and I hope that I got something over there. I know Larry always likes to be educational. I hope I was educational. That was the purpose of it. And let's just have a look to see if we broke that rectangle support in the E-mini. Yep, we broke it, and now you're looking at 45.10. Be careful, because unless by 2 to 3 o'clock this afternoon, there's a really nice bounce about 445.20, 45.22. That's a bit of a problem. Yeah, you got the rectangle. We're just under it right now. Have a wonderful day. Stay tuned. Great programming coming up for the rest of the day. Check out my opening call, my daily newsletter. I'm sure Larry will be back tomorrow. I hope his voice is good. And thank you, Larry, for sitting.